Hello, my name is Porras, and this is my presentation on Gemstar Productions Incorporated as the new production accountant for the company. Now, our first slide here, we have the balance sheet. As of February 27, 2014, we had about $50,000 of cash. Our total assets were at $66,486.45, and our total liabilities and equity were at $66,486.45. Now, these are some big numbers, but when we look at the ratios, we can really see how the company actually did. Now, the current ratio was calculated using our total current assets and our current liabilities divided by our current liabilities, leaving us with 11.3%. Our current assets started at $52,533.33, and we divided that by our liabilities, which rests at $4,653.33. Now, this is an average, I'd say, ratio, but the company could do better. Either way, our working capital ratio ended up being at around $47,000 versus our current assets minus our current liabilities, which was $52,533.33 minus $4,653.33, leaving us with a total of $47,880. Our debt to asset ratio was 67%. This means that we had a little more than half of our liabilities make up for our total assets. So we have more liabilities than assets. So this leaves the company in a tough state because we owe more money than we actually have. Now, our return on those assets wasn't very high either. We get this by taking the net income and dividing it by the total assets, and my numbers were $1,833.12 divided by $66,486.45, and we only got a 2% return, 2.7% return. So we didn't actually make very much on our return. This is a bit concerning, but if we look farther into the numbers on this presentation, you can kind of start to see why this is such a low number. As well, our return on equity was lower than expected, as that was only 4.1%, and we got this from the net income divided by our total liabilities, which was, our income was again $1,833.12 divided by $44,653.33. Now, the profit and loss, the budget that Gemstar came up for was much higher than what the actual became. This left Gemstar at a really big loss in 2013, and I think this year we can bring this around. If you noticed, the event revenue was supposed to be around $25,000 and $25,200, excuse me, and this left Gemstar at a loss of $16,000, and this is just something that I think could have been avoided had Gemstar not accounted for so many expenses. If you can see, the expenses, the variances are at the lowest $440. Now, that was the utilities budget, which was estimated more accurately than the other expenses. And although it was good that we accounted for more expenses than we incurred, our total net income was still $3,666.24 off of the mark. So either way, the budget shows that we were at a loss this year. And I think some things to consider would be less money towards expenses. I know that the equipment that we were renting was discounted because it has been a company that we have been using for many years, and so they gave us a lower rate. Our usual rate is about $3,000, so we budgeted for about $2,250 worth of stuff, but we had $1,500 left over that didn't go anywhere. So, as you can see, this can be a real problem over time, leaving our total expenses, although there was a difference of $13,000, the profit and loss statement does not look up to par where it should be. The actual and the budget should not have as big a difference as we accounted for. Statement of cash flow looked better because most of the operating activities accounted for the majority of the cash. Now, the biggest thing here was the loan for $40,000 that Gemstar took out to support the National Touring Act in 3 cities on their 3-city arena tour, which took them through New York, LA, and Dallas, and cost about $40,000. This is good because, well, that's money that will go back in our pockets over time. However, there was $14,000 that we spent on a truck because the company did not have a truck to get supplies from venue to venue, and this was causing problems. So they made a good investment and still owe about $13,000 on that truck, but the depreciation is about $296.88. So the final thing on this statement was we financed $20,000 of common stock. So this is $20,000 that will be provided by our financing activities. This will leave our cash at $50,000 and $700. So much better looking statement than the previous. However, the company is still not profitable in 2013. Now, here are some suggestions I can come up with. I've come up with 5 controls. I actually had a list of 10, but I condensed it down to these 5 main points I would like to bring up that I think would help the company. First off, we have the company objective, and this is to provide first-class entertainment and services to everything related to entertainment. And this really just goes into utilizing all the current and future technology that we can possibly use and retain as assets, and maintaining as professional as possible a relationship with each and every customer, so that way Gemstar can encourage positive positive things in the entertainment industry, so that way we can continue to receive business from our regular customers. As well, our risk response should be handled by management specifically. It is not probably in the best interest of the company for an everyday employee to take a significant risk This is why this more applies to management, but I think that if management handles each and every risk with poise, then the company will be successful. So that way, whenever we do budget a little bit too large, we can assess this risk and make up for it in another section of our financial statements. So that way, we will continue to gain revenue and stay a positive, healthy, profitable business. As far as information and communication goes, I feel a standard daily memo in each and every employee's email of the company that says each event for the week coming up, as well as the financial statements for the year, like at the end of the year, and just our weekly to weekly budget, so that way everyone really understands what's happening in the company and knows that the numbers are there and what they're supposed to look like. So that way we don't end up with a big loss of $16,000 at the end of a year and budget for $25,000 when in actuality we only made $8,000 that year. Taxes and liabilities. I feel like organization is a key thing in each company, and Gemstar is a company that is lacking a little bit of organization at this point, and I think this is key because with proper organization of all of our legal forms and reports in a central location in the corporate office, in a locked, secure drawer, would benefit the company. This way all of our financial statements and important tax information and legal documents will all be readily accessible and organized. Finally, I feel that monitoring each and every employee through a series of security cameras would not be a bad idea. We can put things over the computer screen so that way the cameras don't pick up, as much when it comes to things that people could hack into the company system and find our numbers through computer screens. But I feel that if there was a camera in each of the offices, that things would go smoothly because people would be afraid to steal from the company. This would decrease our chance for fraud and increase our chance of success. These are just a few controls I suggested for the company, and I feel they would benefit Gemstar as a whole. Okay, so the final recap. The balance sheet showed that the company is in decent standing, but is still has a lot of room for improvement. Some of the ratios were not as high as we hoped for, but that is okay because in our profit and loss statement, we had some good things. And overall, the cash flow in the company is heading in the right direction because most of our cash is through our operations. So if with this moving forward, there should be more solid budgeting, so that way the profit and loss statement is much more clear and concise, and that way the actual lines up a lot more closely with the budget and there's not as large a variance. This will increase the ratios on the balance sheet and make Gemstar a much more profitable company as well. And with implementing the new controls, I feel Gemstar would be in a very successful position and in a great position to be profitable in 2014 and in all futures endeavors of Gemstar. Thank you.